Today's trading takeout is why you need to pay attention to the longer term trend, even if you're a short term trader. Now, there's going to be a very, very specific reason here, and it's not probably going to be one that you've heard of before. Now, there's something in institutional trading called real money. Now, real money isn't like physical cash or anything like that. Real money is when pension funds, sovereign wealth funds get involved with buying or selling an asset. It's called real money because the amount of money that they're putting down is so significant that they have to do it in longer term durations. So they might buy, say, $500 million worth of sterling one day. They might do another, the next day and the next day and the next day till they accumulate a position of, say, I don't know, 50 billion sterling long. Do you know what I mean? So they have to do it over a much longer duration. Now, if they're trying to accumulate a position of that size, they can't be short-term focused. They have to be longer-term focused, which is why the longer-term trends matter so heavily. Now, if we're looking at, say, the Euro chart, for instance, and that 15-year trend line, we can deduce perhaps that if the macro backdrop in Europe is worse than the US, that these larger funds are going to want to be buying dollars and selling the euro. But they're not going to be able to do it over the short term. So that 15-year trend line is why I keep mentioning focus purely on that, because these guys will be looking at that long-term trend. They're not going to be looking at even, the last couple of weeks. They're going to be saying, okay, well, we can see that it's a significant or likely to be a significant pivot point, and we can actually move the market. Most players in the market can't actually move it, but for many pension funds, sovereign wealth funds, the amount that they're putting down directly impacts the flow. And once other funds start catching on to the flow that is occurring, or other large institutional players, then they're going to contribute to that, and it becomes a bit of a catalyst, which is always why I mention as well, about the dumb money. Understand how the dumb money book is positioned too strongly one way, because these guys are happy to come in and flatten it. They don't even pay that attention, but they are in essence the smart money, the sovereign wealth funds, the pension funds, because they are doing things in such massive size and trying not to leave as big a footprint as possible, that after a while, it just becomes self-reinforcing. If they decide that a direction is right, the direction will be right. So make sure you pay attention to the longer-term trends so that you don't get steamrolled on your shorter-term trading.